Hello and welcome to another Monday market update. We have a big week ahead of us this week. First, we're going to start off talking about last week's PPI index, which is the producer price index. And then this week on Tuesday, we have the CPI, which is a consumer price index coming out, which is probably the biggest report of the year. So we're going to talk about that a little bit. And then on Wednesday, we have the Fed meeting where they're going to hike rates, we all expect, by 0.5 point. And then we'll really be paying attention to the Fed's comments. So we're actually going to post several videos this week talking about these developments as they come. So today we're going to talk about PPI, which again is the wholesale inflation index. So this is the number of what producers are paying for goods and services that they then turn into products that we buy. So it's a little bit of a leading indicator. And as we look at the graph here we have on the screen for PPI final demand 12-month percent change. This graph actually goes back to 2011, so it's quite a long graph. But as you can see from this gray bar here, which was the recession caused by COVID, inflation ran up very quickly, and this line here that's almost straight up and down, that's the time frame in which they were calling this transitory. And then obviously it didn't just go away. But as you can see by the two lines, the red and the blue line, both of them are trending in the right direction. Okay, so what is the difference between these two lines? The red line is the total PPI index, and the blue line is the core. This month's reading for the total PPI came in at 0.3% month over month increase, which was higher than expected. So there's some mixed news this morning, last week when it came out, that caused the stock market to have a little bit of choppiness to it. But the good news is the total year over year number, as you see on this graph, is now down to 7.4%, which is still too high, but it's down from 11.7% that we had back in June, I believe it was. So it's coming down at a fairly steep pace now, which is good news. Even better than that is that the core number is improving, which is really what the Fed is looking at, because that's what they affect with their monetary policy. If you jump over now to the CPI graph that we have here, which does not yet have November in it, we will be getting that information tomorrow. You can see that we had the similar type run up after the COVID recession, and then you can see it's also peaked and coming back down. We expect this graph to look like the other one pretty soon. So things are heading in the right direction. We're definitely excited about that. With respect to the CPI numbers and the PPI numbers, this is the third month in a row where we believe we're going to see an improvement. And so that's really what we've been looking for as confirmation that we're heading in the right direction. Obviously, we need to see the report tomorrow to make sure that we have that confirmation, but we're assuming it's going to be productive. So last graph we want to look at, if we jump back over to our month over month CPI graph, where last month we replaced that large 0.9% from October of 21 with a 0.4%, which gave us that 0.5% improvement in our total inflation number. As you look at the November number, we don't know what it's going to be, but if it comes in at 0.4 also, we're now replacing a 0.7. So this month we wouldn't get quite as big of an improvement, but it would still be a meaningful improvement, getting us down to somewhere around 7.4. We'll see what happens tomorrow. That number may come in a little better or worse than 0.4, and we'll adjust our expectations accordingly. But what we want to continue to see is inflation moving in the right direction. All right, that's it for today. We will be back later this week with information to update our CPI numbers, as well as some commentary on the Fed speak after they make the rate hike announcement. Please like, subscribe, and share this video, and be sure to KFA.